Is a recession coming in 2026? Here's what the data says. The word recession is back on everyone's lips. Jobs are disappearing. Oil prices are surging past $100 a barrel. And economists across Wall Street are quietly revising their forecast downward. So here's the question everyone is asking right now. Are we heading into a recession in 2026? Or is this just fear talking? Today on the Capital Brief, we break it all down. Calmly, clearly, and without the panic. Pause. Let's start with the facts. In February 2026, the U.S. economy shed 92,000 jobs. That was the biggest monthly job loss since 2020. That same month, the unemployment rate climbed to 4.4%. For an economy that was supposed to be on solid footing, that is a jarring number. At the same time, inflation is still sticky. Core consumer prices remain above 3%, well above the Federal Reserve's 2% target. The Fed, which cut interest rates 3 times in late 2025, has now hit pause. They are holding rates steady at 3.5 to 3.75% while watching how things unfold. And if that was not enough, a new wild card has entered the picture. The U.S.-Israel military operation against Iran has pushed oil prices past $100 a barrel almost overnight, adding fuel to an already anxious economic environment. Pause. Now, here is where it gets interesting. Because the experts are divided, Moody's Analytics puts the chance of a 2026 recession at around 42%. Their chief economist put it plainly. They believe the U.S. will most likely get through 2026 without a downturn. But nothing else can go wrong. The economy is pretty much on the edge. Meanwhile, prediction markets tell a similar story. Kalshi's recession probability jumped to 33% in early March, up sharply from 22% just 1 week earlier. Poly market briefly touched 43% before pulling back. On the more optimistic side, Fidelity's institutional portfolio manager says the U.S. economy is still in expansion territory, pointing to strong corporate profits, steady lending, and continued consumer spending as signs that a recession is not imminent. And Goldman Sachs is projecting 2.5% GDP growth for 2026, above consensus. So what does all this mean? It means we are not in a recession, but we are walking a tightrope. Pause. There are 4 key threats that economists keep coming back to. Think of these as the 4 cracks in the foundation. Number 1. Consumer exhaustion. American households have been squeezed for years by high inflation and record debt levels. The wealthiest 10% of consumers now account for nearly half of all U.S. spending. If that group pulls back, the entire economy feels it. Number 2, the AI bubble risk. Trillions of dollars have poured into artificial intelligence. But if those investments do not generate returns soon, we could see a sharp market correction. What some are calling a reverse wealth effect, where falling portfolios make people feel poorer and spend less. Number 3, the labor market. Job growth has slowed dramatically. The February report shocked markets. If companies start laying off workers at scale, lower spending follows. And that is how recessions become self-fulfilling. Number 4, geopolitical shock. The conflict in the Middle East has already pushed oil above $100 a barrel. Energy is the bloodstream of the economy. If prices stay elevated, businesses and consumers both take a hit. None of these factors alone would cause a recession. But if 2 or 3 collide at the same time, that is a very different story. Pause. So, what should you actually do with this information? First, do not panic. Recessions are a normal part of the economic cycle. Even if one comes, they end. Second, review your financial cushion. Most financial advisors recommend 3 to 6 months of expenses in an accessible savings account. If you are not there yet, now is a good time to work toward it. Third, look at your investments. Defensive sectors like healthcare and utilities have historically outperformed during economic slowdowns. This is not financial advice, but it is worth having a conversation with your advisor. And finally, stay informed. The economy changes fast. That is exactly why we are here. Pause. That is your Capital Brief for today. A recession in 2026 is not inevitable, but the risks are real and they deserve your attention. We will be watching every development and breaking it down for you right here. every week. If you found this useful, subscribe so you never miss an episode, and drop a comment below. Are you worried about the economy right now? We would love to know. Until next time, stay informed, stay calm, and stay ahead.